Yeah, thanks, Lisa. Hello, everybody. My name's Carol. I'm from Angel S Wales. We're part of the Development Bank of Wales, and we're here to support SMEs and startups with their growth ambitions. So today I've been asked to come and do a presentation on angel investing and what it means to gain investment from investors and what you need to look like. Normally I present to early stage startups, and I know a few of you on the line possibly a bit further along and SMEs. So I don't know if before I start presenting, if you all want to introduce yourselves and just do a quick 30-second intro in terms of what stage your business at and what you're hoping to glean from this presentation today. So could I start with Pistachio Blue? So, okay, so Pistachio Blue, I don't know if you can hear me.
I can do that for you, Carol. Pistachio is a metaverse technology company, startup in orientation, working through looking at people wanting to come and study in the UK from China, but looking at that in a virtual world. So how can we help them understand the kind of place it'll be here, what they'll expect to come here? So she's starting off with helping candidates come to the UK from China. And then from there she is, Pistachio. And from there, she's then going to develop the business into what is going to be sort of, if you can imagine, a virtual application metaverse to come and study here in the UK. So it's all about universities, graduates coming from, people coming to China. There she's back now.
Fabulous. Thank you. Thanks, Nicola. Andrew Beer.
Hi.
Hi, Andrew.
Sorry, I've just joined, so.
Yeah, we were just saying, getting everybody to quickly introduce themselves, so I make sure I tailor the presentation to what everybody needs.
Yeah, sure. So obviously my name's Quality Engineering is the company I represent at the moment. So I'm managing director there. Basically fabrication, precision engineering and powder coating. So multiple sector involvement from nuclear, Ministry of Defence, automotive, renewables, just a small business, £1.4 million turnover, but multiple sector. And at the moment we're on quite a growth curve, looking to invest in machinery and new people coming in.
Fabulous. Okay, great. Thank you, Andrew. Who else? Conrad, could you give a quick intro, please?
Hi, yeah, we're a food and drink local subscription business, and we partner with local businesses that do delivery and do weekly or monthly subscriptions with customers around Cardiff. We're quite early stage. We're looking for maybe a safe note or pre-seed investment.
Fabulous. Thanks, Conrad.
Thanks.
And who have we got next? Eco Receipt.
Yeah, I will cover on the Eco Receipt. This is Nitesh here. And
hi, Nitesh.
Yeah, I'm one of the founder and director for the Eco Receipt. The whole purpose of this application is to make sure that all your digital receipts and documents are stored at the centralized location. And along with that, we are going to do the I would say monitoring and making sure that all your budgeting and the expenses can be tracked easily. So this is one kind of application which is not available in the market, which will give you benefits of storing your digital invoices, receipts, doing the artificial intelligence and providing you recommendations to do the next purchase. So comparison and everything is going to happen here.
And you're quite early stage.
We have developed the product. So product has been developed now, and we have started our beta testing. So now we are looking for our investors so that this can be marketed.
Perfect. Thank you, Nitish. Who else have we got on the line? Is there anybody I've missed? Jay Graham. That's Eco Receipt, isn't it? I think, sorry. So yeah, I think we've covered everybody. So I think hopefully this will be useful for all of you. I think Andrew Beer, obviously with it being an established business and revenues, it's important we make sure you're aware of the other funds within the development bank. So are you aware of those and you've got your key contacts there to get in touch with?
Yeah, fine. I'm involved with some other businesses as well. So
yeah,
it's a sort of general overview I'm looking at.
Fabulous. All right, then, well, I'll get started on our presentation for angel investors and how we can try and help you secure investment from them. So I'll quickly run through the slides and then we'll do Q&A and have conversations after, or if you want to put your hands up in between, that's absolutely fine as well. So first thing is let's check you're ready for angel investors before you get started. Discuss who actually are angel investors and what they look for, and then finally how we can help you. And hopefully that's what we'll go through today. So are you ready? It's a good question in terms of, it can take a long time to build a successful business. And, you've got to give yourself a lot of commitment to that. It's not easy. So just, you've got to start getting yourself mentally ready for this journey you're going on. So the best thing is to start backwards. So if you just take a minute now just to think about what is the end game, what does success look like to you? Where do you want to go? Is your ambitions to be a unicorn? Are you looking to build a 20 million turnover business? What's your focus on the end game? And it's quite important that you think about that end game and how ambitious your growth plans are, because it'll have an impact on your funding strategy. It's very, some companies raise a lot more than others and some grow a lot faster than others. And this is a bit of an analogy here and a bit of fun in terms of what animal you can relate to, but it's very clear that there are very different strategies for raising investments. And they're all good and different in their own way, but the more you can identify what your strategy is, the more you know what you're heading towards. And what you want to do is get your funding strategy in line with your KPIs. So we always talk about the exit planning, because the more focused you are on that, the more successful you tend to be. So if you're saying this is your very first seed round and you're looking to raise 400k, what runway is that going to give you? Often it's 18 months. And what KPIs are you going to deliver in that time frame? Most startups need 2 or 3 seed rounds before they go to Series A. So you need to be ready in terms of, actually, if I'm going to be talking to a Series A investor in 18 months, 2 years, whenever I've got that timeline in mind, what KPIs do they need us to achieve so that I'm working towards those with the seed capital I managed to secure? And if you can do that in terms of exit as well, so when you're thinking about what the exit plan is, most companies get acquired. So it might be, I'm looking to build this company to this size, to look like this, and I know this company or this company is going to be really keen to acquire us. Sometimes startups start their conversations with acquirers very early as well to really understand what they might look like. So if you can, picture that, have those conversations and understand the milestones along the way, you'll then understand the sort of funding you need along the way to get there. So it's not an out and out rule. These things evolve and you pivot, but it does give you an idea in terms of, actually, I may be raising 400k now, but what's the plan in the future? So as you're going through that funding journey, it is a bit of a roller coaster. It will be ups and downs. So one of the most important things you need to do is look after yourself. So, often, sometimes you'll have a co-founder, and, that's why a lot of VCs now will only invest in co-founded companies. But if you haven't got a co-founder, or you want someone outside of your network, even outside of the board, it's really good if you've got that person to go to when, you are having one of the biggest downs. It happens, you're struggling to meet payroll or something's gone wrong. You need to make sure that you've got somebody that you can go to. And, in the early stages, you won't have your full team, so you will be wearing many hats. So, really think about that journey again. And while you're filling these roles that not necessarily fill your skill set, it can start helping you to plan out who actually is going to be in your team, what talent do you need, and start thinking as much as you can about getting your NEDs on board at this stage. They're really, really crucial, and they help give you credibility for investors, and it will take that pressure off you. So investing in early stage businesses is what the majority of angel investors do. That can be high risk because not all succeed. The government recognise this, and they give big tax breaks to investors to try and encourage them to get involved. So you need to be aware of what these tax breaks are. if you're eligible for them, the process and how the investors apply. So HMRC have got quick guidance on there, but for example, SEIS basically means any company under 2 years can apply for that. You have to meet certain criteria, but most of the companies we work with that are innovative, tech, high growth, meet the criteria. And then once you say you're eligible for, we're happy to promote you to our investor network. Later down the stage, you do need to apply to HMRC and go through the advance assurance. It's not something you have to do immediately. Some investors like you to do it straight up, others don't. It's a personal preference. But that advance assurance just gives investors more reassurance that you're definitely going to get the investors are definitely going to get the tax breaks. So when you're in Q4 and you're near the end of the tax year, that can be really advantageous to have that then, because it's that extra assurance for investors. The process for advance assurance has changed over the last couple of years. You used to be able to just apply and get a certificate. Now they say, actually, we want you to name an angel you're talking to before we'll give you a advance assurance. So that's why we say we're quite happy for you to say you're eligible for, because you might not be in conversations with investors yet. And then don't forget post-investment, once you've got that eligibility sorted, once you've got the investment in secured and you're now moving on with the business, don't forget the certificates for the investors, because they can't claim those breaks without them. We have had situations in the past where companies have done this wrong, and last year there was one company that, because they didn't do the process correctly and felt guilty that the investors didn't get a tax break, they gave them extra shares to compensate, which isn't the right thing to do, and it's not the best way to start off your investor relations. So it's pretty straightforward, but things can go wrong, so you need to be aware of the processes and what you need to do. And then the other thing before you go to investors is, what valuation are you putting on this business? It's really hard when most of them are pre-revenue, because there's no right or wrong answer here. All I know is the most subjective and argumentative part of the discussions. So you've got to start thinking to yourself, why are we putting this value on the business? What evidence is there out there that other companies have achieved that? Have they achieved it with smart investors or slightly different money? Because that has an effect. So you've got to try and be realistic, but you don't want to go too low that actually, if you're going to get follow-on funding, you as an entrepreneur are going to be diluted. So you need to strike a balance, and you need to get somewhere where you and the investors are comfortable, and that'll come out in conversations that you have with investors. But if you start way too high, then investors won't even look beyond the valuation. They'll just decide, actually, you're not ready for a conversation with them. So there is a lot to consider on that. And the only way to really get started is to speak to entrepreneurs that have successfully raised and what they've achieved. If you want to get in the mind of an investor and how they think about valuation, most investors will have their own scorecard method. So the Berkus method is a guy who started out as an investor in America. They'll have their own metrics that they measure and put a value on use. They won't really necessarily be interested in discounted cash flows because you're pre-revenue. So they'll be looking at really tangible things they can kind of put a value on now, and that is team, IP, traction you've got, sometimes letters of intent, all those sorts of things that make us feel like this is shaping up to be a business, not that it's a big market and I'm taking 2% of it, because everybody's talking about that sort of metric. So this is something they can really point to. So they're the key things that companies need to actually think about and decide upon before they go to investors. But most people don't know who angel investors are and what they're looking for. So we can touch on that now, and hopefully give you a better picture of that. So the most important thing, angel investors, they're not, these mystical beasts that nobody can, that are very, very elusive. They're actually all around you potentially. The majority of angel investors will be successful entrepreneurs that have been and done it themselves and they want to give back. typically they've sold their business, they're facing retirement and it scares them. They want to be still in the entrepreneurial world, but they don't want a full-time job. So they are the majority of angel investors. But it can also be your C-suite executives, so some of the top CFOs and CEOs in the country. You know, they will be doing a bit of angel investing sometimes. And your professional service advisors, so your accountants and lawyers that work in this space, that understand this space, they get a feel for it and often get involved. But also your industry experts. So if you've got a strong IP and you're working with people in industry to help you create that and understand it, they might be comfortable getting involved because actually they'll understand it from a due diligence point of view on the product. So the point there is you can leverage your network if you have the right conversations. You just have to be careful that you know, you have to talk to sophisticated investors when you're talking about investment because it's a high risk category. So you can't really be talking to the public about it face to face. You know, obviously on the crowd, that's different. So, you know, technically you should get them to sign a self-certification form before you enter into those conversations. So how do investors invest? So, you know, smart investors that know it's high risk build portfolios and syndicate. So if you're looking to raise a small seed round, it's less and less likely that you're going to get one investor putting all the money in. And that has a lot of pros. So, you know, when you think about you've got to do 2 or 3 seed rounds, if you've got a group of investors, you've got more investors to go back to for follow-on capital. You've got more investors to leverage their networks and expertise from. And, you know, you've got a lot of people there helping shaping the company along that long journey you're going on. So that there's lots of advantages and they all co-invest together, and they'll sometimes co-invest with institutions like the Development Bank of Wales. We have a seed fund here in the Development Bank of Wales that will invest in early stage pre-revenue technology businesses. They often invest alongside our angels, doing about a 50-50 ratio of the deal. And our investors like that because they like investing alongside an institution that has the ability to invest up to 10 million in any one company. So they know they've got a follow-on capital, they know they may pay for some private due diligence, which they'll share, and they'll be supporting you with putting NEDs in and helping you work towards an exit too. So they'll co-invest with other angels, but they'll also co-invest with institutions too. So what sort of companies get angel investment? So first and foremost, there's absolutely no hard and fast rule. Angel investors, it's their own cash. They will do what they like. The majority are looking for the similar sort of stuff. So we can run through that now. And first and foremost, it's team over anything. You know, it's all about execution. So, you know, 90% of their early stage scanning, if they want to have further conversations, are, do I believe in this team? Do I believe they can execute? Have they got a grip of the journey they're going on? That'll be the first tick they'll need. The second is, you know, to get a return on angel investment, given the high risk nature, there has to be some innovation and high growth. So I think the average investor would say every investment they make, they're looking to try and get a 10x return from, because of the 8, 2 may deliver the return for the rest. So in their portfolio, if they've got a portfolio of 10, most of them will be that high growth. They might have 1 or 2 in there actually that are more modest growth, but are delivering dividend returns earlier, and that's a personal choice. But the majority have got that high growth ambitions. And when do they invest? Majority of investors we know will want to see some kind of MVP alongside some kind of market validation. So we get a lot of companies coming to us with a beta tester saying they've got this great solution for an issue, but they haven't necessarily wrapped around enough market research to prove the market wants it. So really work on both of those in parallel. It might save you time later down the line in terms of pivoting and product market fit as well. So, you know, the more you can do around that, the better. Some companies will come to us with an idea and there's no MVP. The challenge, some investors do come in early, but the challenge you have with that is the earlier you come in, the less of a value you can put on the business, the more equity you're going to have to give away. So you need to work out how much you're raising at that point. It'll probably be a very small seed round for you. So get ready, and then obviously later stage companies, investors, might be building a portfolio and might be looking for later stage too. It's just they're not the norm we see. And what they're looking for is, obviously you need your investment documents ready. So your elevator pitch, your pitch deck, your business plan, your cash flow forecasts. We've got guidance on that I can share with you. But the majority, from the pitch deck, what are they looking for? They're looking for a real high level snapshot teaser of what the issue is, what solution you're providing, why your solution is better than others out there. It's commercially viable, given all the costs involved, and the market is saying they want it and the price point works. And your solution is a big pain point for them. There's a lot of solutions out there that actually no one's that they like, but it's not a priority for them, so they're not putting it in their budget. So that's an important thing. And in the cash flow forecasts, investors are looking for seeing that you've got an understanding of all the different costs that are involved, but also any assumptions you've got on your projections. So when you're talking about big markets, try and avoid that. Well, we're only taking 2%. So, and we're being, we've got a pessimistic and optimistic view on that, and some contingencies. Try and dig down a little bit deeper and think about your route to market. So think about, this is our growth trajectory. This is why we're assuming it. This is our route to market plan. We think we can convert this many companies along the way. This is why we think we can convert them, and give investors confidence that actually once the money's in the bank, these are the actions you're going to take, and actually this is how you're going to deliver some growth. And then exit strategy. So having spoken to many angel investors over the last 5 years in my role, the ones that have been doing it since the 90s and have got over 70 investments have said the most successful companies they've invested in have focused on exit from the beginning. So investors know this, they talk to each other about it. So if you've not got your eye on it at all, that won't give as much investor confidence. So no one knows what the exit will be. You're going to pivot, you're going to be ups and downs, it's going to go a long way. But the fact that you understand that journey and the exit thinking is important will really help investors get confidence in you. So how do you find angels? So yeah, there's multiple ways to find angels, and it's hard. There's not there's not a lot of them out there in terms of maybe 20,000 in the whole of the UK actively investing. So you've got to utilize networks like us. We are a network here building a sustainable angel community. We're not there as a broker, so we're not going to charge you anything. We just literally want to get the best talent in Wales, supported by educated investors. So come to our platform, see who we can help you. Leverage your network, leverage any smart investors. And there's a multitude of other platforms and groups out there. Some charge fees, some are more upfront, and it's all various. So you need to speak to other startups that have been successful. How have they raised, and especially ones in Wales, because what other funds are out there with a geographical interest. We have some of because we're a young network, we have some of those early stage SCIS funds on our platform pointing to Wales, and we have monthly catch-ups with them. So as well as our core angels, we do have that wider reach with the funds. And obviously crowdfunding is hugely popular and really effective at getting that first round in. What I would say is, in your very first round, when you're at your most vulnerable, you want the smartest money in as possible. So you want to try and get, you want to consider all options, get everything on the table, see who comes in terms of who can add value and what value they add, and then go to the crowd to close, if that's what you want to do. So pitching to investors, there's a huge amount of advice out there in terms of what a good pitch deck looks like and what you should include. The most important thing is you're telling a story, and investors have to buy into that. They want to go on a journey with you. So, have you got buy-in by the end of that, in terms of they want to go on that journey with you, it's exciting, and they want to be part of it. It's quite sometimes you can talk about the customer journey so they can visualize what that looks like. But also, they're really buying into you and saying, you know, when it's up and down, when it's down, do I want to be in that journey with that person? So get them to buy into the journey and joining you along it. And then, you know, this is where your sales hat comes in. You've got to be good at your follow-up. So, you know, running a business and raising funding is incredibly challenging and time consuming. So you need to streamline as much of this as possible. So whether it's a day of the week that you talk to all the investors, or whether it's a one pager you send, you know, as soon as you speak to investors, you need to try and get in contact details and say, look, I'm sharing updates on a regular basis. Are you happy to be included in the regular updates? So you're not just randomly picking up the phone and trying to see if they're still engaged. So think about your strategy once you've got conversations going with investors. And remember, not all investors will be from your industry. So when you are pitching, dumb it down. You know, they call it the mum test. Make sure it's not too technical, and people can see not just how amazing the tech is or the solution is, but actually why it matters to the customer. So once you're pitching and you are starting those conversations with investors, you know, it is more legally binding than most marriages. So you've really got to be careful about who you go into that relationship with. If they have done previous investments, can you talk to the companies they've invested in? And another key thing here is to make sure you're aligned. You know, when we talk about exit strategy, this is where it really helps post-investment, because if you have your first few board meetings and you haven't put in any KPIs, you haven't really talked about the end game, you and your investors can, you know, cause friction in terms of, well, actually, I invested on this basis, and now you're thinking, you're talking differently, and that's concerning me. So, you know, the more you can think about, you know, the end game, the more aligned you are, and the more healthy those relationships will be. Some investors will want to be investor directors. Others might be happy to be board observers. Others might be syndicate members that are acting passively. So think about their role post-investment, and think about the fact that if you have got a lead and they're leveraging the syndicate on your behalf, when you're doing your post-investment updates for your investors, think about the reporting you do and how you share that reporting, because you can utilize that reporting in terms of call for help. So we've got one company that's got investment for our co-fund that will do a quickly 3-monthly update and just say, these are our challenges this month. Anybody in our investor network that can help, let us know. So they're not relying on the lead investor every time to lean on those syndicate members. And the most important thing is get to know them. You know, in a pitching environment, everybody's got their investor founder hats on. So if you can take them into an informal environment and have a conversation, you start to get to know the person a bit more. So don't be frightened to say, can we go, you know, do you want to meet up and do this? Because, you know, you really are trying to build that relationship. So when you start going through the deal process, there'll be lots of documents to think about. I said about co-founders earlier. If you are co-founders, it's really important you get some kind of co-founder agreements in place, because, you know, if one of you does leave, you want to make sure the terms are that, you know, the business can continue in a strong position without them. Most investors will issue you with a term sheet and saying this is the terms they want to invest in. But if you're going to multiple investors from multiple areas, there's nothing wrong with you saying, actually, these are our terms, outline terms, and presenting those and being proactive and presenting your own. You'll have to come up with shareholders and articles of agreements, and a lot of companies do rolling rounds now, and so it's not just one round in 1 month and it closes. Actually, some people subscribe early and some people come in up to 6 months after. So get your head around those terminologies and working with the legal firm. But the most important thing for me to say today is understand the documents. In terms of your investor relations, you know, these documents are not cheap for you to get done. They will have legally binding terms in, and you need to understand those, because, you know, relations can fall down when you do something as a founder that actually you needed to have to get consent from the other shareholders from, and you didn't do that. So take the time to sit through the legal team to say, actually, what do these terms mean, and how am I going to be running the business post-investment? So yeah, the key thing straight after investment, you've gone through that journey, you probably need to refocus now on growing the business. And in terms of that funding you've got, you're going to say, right, I've got 400K, it's going to last me 18 months. What are the key KPIs we've agreed of, and how are we going to make sure they're the focus of our board meetings going forward? So hopefully that'll keep focus for you. And manage your investor relations. Like I said, there will be 2 or 3 seed rounds most likely. So you want to make sure you've decided your post-investment reporting, so that, not everything will go well, and it's not a sales document, it's a true document. But the more you inform the investors, the more they'll understand what that 18 months look like, and the more likely are then to reinvest when you come back to them. And again, look after yourself. This is a really exciting but challenging time. You'll be recruiting people, you'll be trying to get talent, you'll have some people that leave straight after you've recruited them, and it will be stressful. So just, look after yourself and get that wider team of support around you. And don't forget, now that you've had the investment, make sure you apply to HMRC to get the investors their tax certificates. So working with us, how we help. During the pandemic, it's been a challenging time for everybody, but we've had a lot of positives from it. Positives are that nobody's geographically bound. We can get online and do online coffee meets, so more people can come to the table on the first calls. And the other positives, we're a young network. So, a lot of our investors don't have these huge portfolios they've had to run in and rescue. So they've still been keen to do new deals. But it is limited in terms of how many deals we can do, because it is all about trust and relationships, not just between the founder and the investor, but also amongst the investors that are still getting to know each other. So delighted to say last week we did do our first investor networking event, where we're starting to get the community back together and building relationships so they can go into deals together. So this is a couple of examples of deals we have done and how they work. So Concentric Health, that's a deal that got done in the pandemic and went through that process. So we had an exceptional founder, a lead investor that really interested in medtech. We got that deal on our platform. We showcased it to the investors to have a coffee meeting with DAF and Ed. A few people came online to that, had conversations. That led to more conversations, and then raising nearly $500,000 with 24 investors. So that's the sort of deals we're kind of shaping as we go forward. The other deal, which was To Be Enterprising, was another business down in Swansea, and that was a deal where we got some investors in, but our lead investor that is out there building syndicates leveraged his own network and brought in investors alongside our network. So both good examples of bringing lots of people together from different places to leverage capital and expertise for startups. So our process, part of our network, we have a digital platform where we showcase deals. It's a bit like the crowdfunding platform, but it's closed for our community only. If you want a full overview of the information we need, you can email me for that. But it is your elevator pitch, your 60-second pitch to investors. It is your pitch deck, your PowerPoint presentation. Video pitches can work well too if you're happy to do them. It's all about team, and if you can voice over the slide deck, or if you can find an innovative way to engage the investors, then we encourage that. We also ask for your business plan and cash flow, because investors will ask me for those before they're prepared to meet with investors. But it's important to say that those 2 documents are not a free-for-all on the platform. Investors have to put their hand up, say they're interested, and then we will unlock them for them. And also on that platform, like I said, it's free to join. We're there to connect you. You're on it for 3 months, but most of the interest does come in the first couple of weeks. And you've got some investors that come in early, and then you're on there for 3 months, and some investors might come in to close the round. So keep the communication going with us while you're on the platform in terms of traction you're getting outside of the network, because we can utilize that. And we're not FCA regulated, so we're not here to sell your opportunity. We're here to showcase. So I have to be careful in terms of the language I use with investors. So hopefully when you go on the platform, we'll email them your elevator pitch and they'll log in and take a look themselves, and that'll drum up interest. Other ways we try and drum up interest for you is if I think a particular investor would like it, I can say, look, you understand this, can you give me some feedback? We do a monthly newsletter to the investors, so any that have gone live that month, we'll remind them and get them to look on if they haven't. But if in those 3 months you're on the platform, you have something that happens that's really good for the business, we can give at least one alert saying, oh, this company would like to update you on this progress, and share the details of that through an email. And we're getting back to doing in-person events. So we don't do the traditional Dragon's Den style pitching events because we've got the platform showcasing all the detail. But what we do like to do when we do our investor community events is showcase the platform, which is what we did last week. So when we do our investor community networking events, whoever's on the platform at that time, we will invite to the network and say, just stand up, let the investors know you're here, do a 2-minute intro about who you are, what you're doing and where you're going. It's not a pitch, it's just flagging yourself to the investors, and then have the opportunity to network in the room. And that might lead to investment, it might lead to conversations in terms of other value adds, but it's informal because we really want you to relax and build those relationships. And the final thoughts are, there's not a huge amount of investors out there. It's very competitive. So make your story compelling. Try and be unique if you can. Investors see slide decks over and over and over again. But it is all about storytelling. And be ready. You just never know investors you're going to come across. So that 60-second elevator pitch, issue, solution, why you, how you're going to deliver a return, have that as an overview ready for anybody that you come across. And utilize your network, get intros from people, that try and make it as less cold connections as possible, and utilize us. We have a good network here in Wales. And that's pretty much a snapshot of all the things I think you need to be thinking about. I realise I haven't gone into much of that in any detail. Is there any questions that anybody wants to draw upon following that?
Yes, please.
So who said yes, please? Because I've got a hand up, but I can't identify the voice.
I think it was Mr. J. Graham, I think, that said yes, please. And then I put my hand up as well.
Sorry,
thanks, Nicola. Sorry, yeah. Go ahead.
I'm in the car, so I pulled over.
No worries.
Just shouting at you. Thank you for that presentation. It's really good. I appreciate it. I've got a few questions for you. Is that all right?
Yeah, absolutely.
Sorry, guys, I'm hogging. Okay. First things first, have you got like the startups in your network who you funded that you're happy to make introductions to, or is that on a case-by-case basis?
Yeah, well, it's a case-by-case basis. I think they're aligned and they can, especially in the same sector, but often they know each other anyway. So,
yeah,
every startup's busy. So ideally you're out there networking and meeting startups anyway. But if you're not, and we feel you're isolated, then we'll try and get you involved in the ecosystem for sure.
Yeah, it just means that people have been through the investment process with you guys and can just sort of, give that kind of insider info, because that would be handy to kind of know what their experience was like. I'm sure we can track them down ourselves, but if there's any intros going, of course we'll take them.
Yeah.
So that'd be amazing. So we're looking potentially for a safe note. So are you familiar with the safe note as a function of raising investment? No,
expand on that a bit more.
So, it's a convertible debt note, very, very common in the US, convertible debt.
It's a convertible loan note, really, basically, then, yeah?
Yeah, exactly, but without the loan, because like no startup is ever paying that loan back, because usually the rate's like, double digits. So the investors in the States were like, well, nobody's actually using this. No one's actually paying back the debt, so we just created a safe note, SAFE. And it's really made popular by Y Combinator.
Yeah.
So now we're used all over the startup sort of system over there. So I know that everyone loves a tax break with EIS and SEIS, but are they open to SafeNote as an option because for a founder, it's not capped, so it will vest as soon as you raise a round, so let's say Series A or seed, but it gives the founder the opportunity to kind of just keep living the kind of unicorn dream if they feel that they can do it.
Yeah,
I suppose
the challenge with convertible loan notes, which I know more about, is, like you say, they're not always eligible for SEIS and EIS. And that's what most investors invest in. 80% of investors across the UK will say they need tax breaks to help de-risk it. So that's going to be a challenge for you. And a lot of people use the convertible loan notes because they can't land on a valuation rather than any other reason. So yeah, I think safe notes can be handy for investors and institutions, but for angel investors, it's going to be more tricky because you're going to have to get around you're not able to offer the tax breaks.
Yeah, of course. So I've got a few more. Are all your angels only based in Wales, or are they based in the UK?
Majority are based in Wales. We have some in UK, some in America, one in Dubai. So yeah, we have got a scattering elsewhere too.
Okay, amazing, thank you. And last question. So I've heard like mixed feelings about raising money in Wales because the valuations are a lot lower. So typically going to be a lot higher London and then even higher Germany and the US. Is that just like gossip, or since the likes of like Yoello, Amplify, so guys really steaming ahead, Son of Eight, things like that, is that changing the landscape here in Wales where investors are actually like giving, I guess, bolder valuations? Not that I'm like asking for anything crazy. I just, what's the appetite like? Because we are sort of heading potentially to a recession, so people might be taking more risk, trying to win the other side. I don't know.
So a huge amount of seed stage investments are done by the crowd now. So the valuation is inflated by unsophisticated investors. So yes, higher valuations are being achieved, but it's not necessarily by smart investors. There was a research done recently that was published in Angel News, where a lot of the smart investors from the 90s are actually not investing at the moment because they're finding valuations are too high. And you'll find a lot of these companies will be having down rounds when they go to Series A. So initially people are succeeding with valuations, but I don't know if a lot of people believe it's sustainable. But the most important thing is, what's the end game? If you can justify the valuation you have now because that's the exit you're planning, then you can convince investors that it makes sense.
Okay, thank you. Yeah, that's cleared it up for me. Thank you very much.
And America, absolutely, they're billionaires out there. So a pre-revenue startup, it looks at like $6 million. So yeah, I totally get the US market is very, very different.
Yeah. So that's kind of what I'm sort of like trying to piece, because obviously we're based in Cardiff, but if you can get on a flight or whatever, I guess is it because the network's closer here, it's easier to get into the network, or
I think you've just got to have multiple conversations and see what the best option lands for you. Sure. Don't rule anything out until you've started conversations.
All right, thank you very much, appreciate it.
Thank you, Graham. Graham, sorry. Nicola. James, thanks, James.
No worries.
I just had a question about speed, actually. I'm not suggesting everything has to be lightning fast, but how quickly could a investment deal be worked out, and how quickly should an investment deal be take? And I know it's a piece of string, but on average or within the realms of normality. I've just got a couple of clients that are quite desperate at the moment for some investment, and they've gone through a lot of different avenues and they're running out of time.
So
just wanted to know about time.
Yeah, so they say the average timeline is up to 6 months from starting out to completing. It will depend on the particular angel and group of angels in terms of how much due diligence they want to do. You'll get some people that are very comfortable because they're putting maybe 10K in a syndicate to happily 2 weeks later after seeing a pitch say, I'm in, let's go to legals 2 weeks. I thought the legals will take a good 3 to 4 weeks, and that no one can it's really hard to slow down that process. So it will depend on the number of investors, the amount of due diligence they want to do, and if there is a VC involved. You're more likely bound to the VC's timeline than you would be an angel investor's timeline, because they will have investment committees and processes they have to go through, whereas angel investors can just make a call on their own money as instantly as they feel comfortable.
Okay.
So yeah, allow up to 6 months, but it can easily take 3 with the right people understanding the business.
Thank you.
So Nitish, would you like to ask a question?
Yeah, regarding you mentioned about the view of the terms and conditions and the legal aspects, which needs to be thoroughly reviewed.
Yeah.
Is there any support which we'll get? Because as you also mentioned that it is going to be, or it may be an expensive deal to hire a legal person.
Yeah, I mean, the legals are so important. You have to pay for legal advice on them. We can't give any kind of support on those because we're not qualified to do so. You can go on places like Seed Legals and they'll have some guidance and they'll have some documents, as does the UKBAA, the British Angel Association. They have some template documents for investors. So there's template documents out there on the web which you can kind of look and understand, but we do not get involved in those because they're legally binding, and it's really, really important you understand them and get some professional guidance.
Okay, that's fine. Thanks. And another question was more on this ACIS. So like we have got ACIS and EIS certificate. So we have received that. Now, how do we promote it? Because is it something which we need to mention in our pitch deck that we are ACIS?
Yeah, so you just need to stamp the deck in terms of this is what we have. You know, and investors are fully aware of what it means. So you just need it as a bit of a badge on your pitch deck.
Okay, so if as you mentioned in that deck here that there is an email ID where we can share the information and somebody can review and let us know whether this is fit for the investment or not. I assume that this is again a free service and there is no charge for that reviewing of the deck and providing us the recommendation.
Yeah, I mean, we're not there to review and improve. We're just there to review and say, yeah, this is ready for investors. We're happy to get your deal. So what we do is I can email you what we need.
Yeah.
You will send that back to me.
I could do that, Carol, because I'm emailing Nitesh and the team at the moment. So I've got your details. I'll send that on for you. Don't worry.
Amazing. Thank you. So yeah, if you email me what we need, we can then get your deal in draft on our investor platform, and I can share my screen so you can see how we're presenting you. And then if you're happy with that and you can see the SEIS badge and the elevator pitch and everything else, we can then get you live. And we don't charge for our service. DevBank fund us to do that for you. So we're in a fortunate position that we can not have to charge you any fees.
Okay, that's great. Thank you. That's it from my side.
Thanks, Nitish. Was there anybody else? Let's have a look down. Don't think I can see anybody else. So I think that's all the questions, Lisa.
Yeah, there's nothing on the chat facility there. So and I think they've got your email address now. If anything comes up that they think of afterwards, they okay to give you, just drop you a quick email?
Yeah, so drop me a quick email for anybody that hasn't spoken to me before and isn't aware of what we need. I can quickly email you exactly what we need for the platform and to progress. We can then have a follow-up chat and review that on the platform and get things moving from there.
Fab. Okay, I think that's it then for today. Everyone off for a coffee and some lunch now. So thanks, Carol, for giving up your time today. Thanks everyone for joining us. And
thanks all.
See you on the next lunch and learn session. Thanks everyone.
Thank you.
Thanks, Carol. Cheers.
Bye-bye.
Thank you very much.